Over the last week, there has been nothing short of absolute total chaos in the United Kingdom. Now, if you live here, that might seem like it's almost the norm these days, but this last week has been totally different. For the first time ever, really, I'm seeing people ask me on this channel to actually talk about the United Kingdom en masse, to explain just what exactly is going on, and of course to give my take as well. It's hard for me to stress just how rare this is. People outside of the UK really don't seem to care about the UK all that much, which just goes to show just how insane this week has been. Today, though, we will do exactly what you're asking. We will explain what has happened in the markets, what's happened with the pound, with pension funds, why our currency has lost so much value, why markets tanked for a moment, and then why American markets seem to soar out of nowhere on this news. Finally, then, it will finish off with exactly why almost everyone you've listened to regarding this topic so far has been ridiculously wrong. Now, just as a little bit of background for the context here, so we all know where the UK was prior to last week. Inflation has been incredibly high in the UK over the last year or so because, of course, of gross money printing that we saw over the pandemic by our government. This is a very similar situation, and it's probably the same situation that you're seeing in your government at home as well, in Europe, in the US, or wherever else you live. Now, that inflation situation obviously got worse when Russia invaded Ukraine because our sanctions limited the energy imports we were able to make from Russia, and that reduced our supply, and so it sent prices soaring. Inflation in the UK topped out at about 10% a couple of months ago, close to the same levels that we're seeing in America, and actually very slightly lower than the levels we just got out of Europe today. On top of that, British economic growth has stagnated over the last year as inflation has really started to hit this economy. According to GDP figures, the UK is probably already borderline in a recession, which again sounds really bad, but that's pretty much the exact same situation you see in Germany, France, Italy, Spain, or the US or Canada as well. The difference for Britain, though, came with our politics. Of course, Boris Johnson was our Prime Minister, but he essentially got ousted and kicked out by his own party for basically having too many scandals and too much bad press. He was then replaced by Liz Truss, our brand new female Prime Minister, who seems to be further right economically than Boris Johnson. Importantly, she wants to change the British economy to make it a low tax and low spending British economy, basically a more capitalist society to create wealth and to stimulate growth. Now, to do this, she put out what people are calling a mini budget, which is essentially just the announcement of her main economic policies for her time in government over the UK over the next few years, and the main points are as follows. They're going to be removing the highest rate of tax of 45% for people earning over £150,000 a year. They're going to be reducing the level of the lowest tax rate to 19% for those earning over £12,500 per year. And last year, the previous government announced a rise in national insurance, which is basically just a second income tax, and Truss reversed that rise. And then, of course, the government last year also announced a rise in corporation tax to 25%, which Truss also reversed. Finally then, on the major tax cuts front, she's reduced the size of stamp duty, a massive one-off tax that people pay in the UK when you buy a house. There are a few other tax cuts as well, but those are the really big ones. There are also some other things that came out from this budget, mostly though about spending and how it isn't necessarily going to fall in line with new lower tax revenues for the government. The biggest one here is that to stop businesses and people from going bankrupt from these new energy bills that have exploded in price, the government's going to spend what they estimate to be £60 billion over the next 6 months to put a price cap on energy bills. Of course, again, there's much more to it than that, but those are the really important bits that the markets, that the financial institutions that drive our markets as well are actually paying attention to. Now, the argument for this plan is that it puts money in people's pockets, or rather the government just stops taking so much money out of people's pockets in the first place, and that will stimulate spending, that will help to grow the economy, and there are big fears of a major recession here right now, so that's what the government deems important. Now, if you're like me, you're constantly thinking about how best to get an edge on the markets and really make your investments work for you, then you need to hear about this video's sponsor, Composr. They provide a new automated trading platform that allows you to build your own personal strategies called symphonies that work around the clock to your set specifications. Say you want to build into assets that are building up momentum, you can select a range of different equities and commodities that you're bullish on, and at the end of every month, automatically have the software rebalance your portfolio into what's performing best, just like you see from this symphony behind me here. Or say you want to switch your portfolio between risk on and risk on assets. You can have the software track the 30-day moving average of the SPY to make that decision for you, like this symphony does here. The possibilities are quite literally endless, and it's really easy to use. You can copy other people's strategies, edit them to fit your needs, or build one entirely on your own using logic gates so you never need to write a single line of code. You can even backtest your strategies to see how they would have performed in the past. So if that sounds interesting at all, if the idea of creating your own mini hedge fund sounds appealing, then make sure to check out the link down below in the description. I personally am seriously excited to see what some of you guys can build using this website. So check out Composr using the link down below in the description. That's Composr with the link down below in the description. This plan, though, got loads of bad press and negative attention pretty much from the outset and throughout, and from all across the political spectrum as well. Most of the focus was on the inequality front, claiming that this budget is about handing out money to the rich while the poor starve, talking about tax cuts for the rich, trickle-down economics, and all sorts of that usual stuff. This Guardian article behind me here says a budget for the 1%, and that really sets the tone for the first load of anger about this mini budget. And it's worth noting again that this isn't just left-wing media outlets pushing this narrative, this is the main narrative that you see all across the board. The secondary narrative that we see is that it's fiscally irresponsible, and that's basically because this plan will need lots of government spending to carry out. Tax cuts with more government spending means far more debt, and that's frowned upon often these days, especially when debt is getting more expensive as it is right now. Labour, which are the main opposition party here in the UK, took this sort of attack line a lot, and they claim that this is irresponsible and will cause the UK government to essentially go bankrupt. Another big thing about this mini budget, though, is that it goes against typical neoliberal and globalist principles that have been pushed very heavily over the last decade. The planned corporation tax increase to 25% that Truss has now scrapped, for example, was a result of the USA wanting the entire world to have the same high corporate tax rate to ensure that no one country like Ireland can slash their corporation tax to attract business from overseas. Scrapping this rise up to 25% goes against that idea, and it's focused on putting the British economy first, which of course globalists and neoliberals are never going to like. It also goes against these typical narratives these days of socialism. It follows the basic ideas that lower taxes drives economic growth, which is broadly speaking true, as opposed to these leftist ideas that government should try to control as much of the economy as possible. Now, as a result of this perceived narrative, these policies also got attacked by those same globalist and neoliberal institutions like the IMF, the International Monetary Fund. For example, they had this to say about this package: "We are closely monitoring recent economic developments in the UK and are engaged with the authorities. We do not recommend large and untargeted fiscal packages at this juncture, as it is important that fiscal policy does not work at cross purposes to monetary policy. Furthermore, the nature of these UK measures will likely increase inequality." Basically, the IMF came out and said that inflation is still a problem, so this could turn out badly. Oh, and it will also cause more inequality, so you shouldn't do it. We also got news out from US government officials saying a similar thing, saying that they're worried about the plan and that they don't want the British government to carry out this plan, saying that they should just back out and not go through with it at all. Now, all of this bad press and these negative reactions and these fears of higher inflation basically sent the pound tumbling. It fell from around about $1.12 before this mini budget was announced to about $1.03 at its lowest point, which was very close to parity. We also saw UK government debt, known as gilts, crashing too, which sent their yields soaring. Usually this would just mean that the UK government spending costs a lot more money, which isn't good, but isn't an immediate threat. That's a threat for the future. The problem this time round is that loads of pension funds in the UK owned a lot of these gilts and they were levered up against them. They almost all got margin called and collapsed in some sort of weird British Lehman moment. We didn't actually know this at the time until this was all done and gone through though, but financial institutions did know it, which was why they all shorted the pound and sent its value crashing. In order to try and fix this situation, the Bank of England came out and basically put out this announcement here, and they said that they've simply started quantitative easing up again for about a month to try and lower these gilt yields, these bonds, to stop pension funds from collapsing. Now, this has been seen in a bunch of different ways. Some saw it as a total pivot that people have been looking for from central banks for ages now, whereas others saw it simply as a limited action just to try and stop a Lehman moment. Either way though, it provided huge support to the gilt market and it dropped yields by about 2% within a couple of hours, and it stopped that Lehman crisis from happening, and then it allowed the pound to recover to its value where it is today of about $1.12 again as I'm making this video, almost exactly where it was before the budget came out. So the big narrative here by most legacy media institutions is that even banks and financial institutions were so terrified of this budget that they abandoned the UK and everything crashed. The reality is that these financial institutions knew what the media didn't, that the rise in government-linked bonds or gilts could lead to a Lehman moment and financial collapse because there are no leverage limits on those debts because they were thought to be so safe, and frankly because we haven't seen a crisis with these gilts before, so things just simply aren't going to be regulated to a sufficient degree. The fact that the pound has now pretty much fully recovered at the time of me making this video, and that the economy obviously didn't crash overnight, proves that this main narrative that this mini budget killed the economy was just outright false. It's also really quite easy to see why this narrative was so false when you look at the basic facts. Now this tweet here encapsulates it all pretty well. These here that you're seeing behind me are the main costs to British government expenditure right now and over the last couple of years. It's worth knowing that every single one of these costs, except for the one at the bottom there, has been known by the market now for ages as well. In particular, Liz Truss literally ran her leadership bid specifically on tax cuts and especially on reversing the national insurance hike and the corporation tax hike that's mentioned here. The markets then have known about these $17 billion worth of tax cuts for about 2 to 3 months now, and it is no surprise that those were in the budget at all. That was perfectly expected and priced into the markets. The only surprise here that actually came from the budget was this bottom one here about removing the top 45% rate of income tax, which will cost the British government about £2 billion per year in lost revenue. Those other tax cuts that we already mentioned, well, they cost about £17 billion a year, but we are now expected to believe that the economy was about to crash because of that additional £2 billion a year. Something simply doesn't add up here. To make matters worse, of course, the real massive cost of this budget is the energy price cap, which will cost about £120 billion over the course of an entire year, as estimated by the British government, and that's being heralded as a good thing by the neoliberals and globalists all over the world, and actually all the opposition parties in the UK want that package to be even bigger. How on earth is a £2 billion tax cut supposed to crash the economy when a £120 billion expense did nothing of the sort? What seems clear to me is that this narrative was driven by people terrified of sensible, simple right-wing economics. The IMF, the United Nations, the EU, and the World Economic Forum all seek to extend the control and authority of organizations, corporations, institutions, and governments, so they push radical left-wing policies that do just that. Economically right-wing policies allow individuals to dictate an economy, and it puts the control back into the individual, so that control is lost by the elite. There was a specific targeted attack all over the world on this budget for that very reason. We saw a very similar thing happen just last week as well to the brand new, again, female Prime Minister coming out of Italy who has suffered similar attacks. This is all specific and orchestrated to try and increase their control over the normal people. Let's not forget now that the International Monetary Fund pushed for COVID lockdowns over the COVID virus. They pushed for the British government to spend £360 billion on something it couldn't afford, on lockdowns that simply weren't necessary. But now they're chastising the British government for being irresponsible for a tax cut that accounts for not even 1% of that expenditure that they encouraged. It is the IMF's and other institutions' fault that we're actually in this recession in the first place, because every single problem that you see in the economy right now, it comes from lockdowns, from COVID. It's that simple. It didn't come from the virus itself, but from our government's reaction to that virus. Now, with that being said, it should be pretty clear what my thoughts on this issue are. It's massively overblown and characterized by an irresponsible media trying to drive a specific narrative. With that being said, though, I have to put one massive major caveat over this entire video. The UK's economy is actually still screwed, just not for the reason the media is telling you. No, these tax cuts won't crash the economy at all. The real threat is still without a doubt inflation, and there's simply no fighting it. Now, I know that tax cuts aren't good for inflation and that actually higher taxes might help to dampen consumer demand, but they are nothing compared to the expenditure that governments are putting on right now. On top of that, the Bank of England is scared to raise interest rates enough to actually stop inflation at all. They've already now shown a willingness to turn the money printer back on as soon as feasible, so it will almost certainly happen again too. That means more money printing for the future and more inflation as well, with prices continuing to skyrocket out of control. That, plain and simple, is the real deadly threat to the British economy. It's the real ticking time bomb. The real threat to this economy isn't the sensible economics about letting entrepreneurs create wealth, but of the debasement of our currency. Now, if you found this video interesting, if you want more on it, then I could do another full video explaining just the intricate financial details of everything. In particular, the pension funds and the idea of a pound crisis ensuing, all the stuff like that. Even the fact that American stocks boomed on this news for about a day because they interpreted the Bank of England as pivoting and turning on the money printer full time, and investors thought that would increase the likelihood of the Federal Reserve doing the exact same thing. The truth is, though, that this topic is massive, and a video covering absolutely everything would be well over an hour long, and it would be near impossible for me to keep the structure strong and concise in any form at all. If this video performs well, though, if you guys like it and you comment and you watch it, then I will do that for you. If it isn't too well received though, if it doesn't perform well, then there's plenty of other information out there on the internet that can explain everything to you. I'll only do this second video if there's actually demand for it. Now, I also know I don't usually make videos on the British economy, and a lot of people wonder why. And the simple fact is that I try to make videos that my audience will like and that are relevant for you. And most of my audience is not British, despite the fact that I am. I hope you don't think that makes me biased towards the UK because I often ignore our problems. It's just that the problems in the UK don't really affect the people who actually watch my videos for the most part, especially when you compare the problems you see in the US or China.